I'm John Rosenberg from Prestonsburg, and as Representative Owen said, I'm the volunteer predatory lending specialist for AARP. I've submitted some written comments which I hope you have a chance to look at, and I will try to summarize those comments in the interest of time and to give our last speaker adequate time because what she has to say is very important. AARP is one of 65 member groups of the Kentucky Coalition of Responsible Lending. We have faith-based groups, housing groups, consumer groups, all of which have had, whose members, all of which have had folks come to see them about the difficulties they've had because of this predatory lending system that goes on through the payday lending agencies. One of AARP's missions is to advocate for the financial security and stability of its members and senior citizens, especially low-income folks living on fixed incomes in the United States. Nothing could frustrate and interfere with that objective more than having its members who are in financial distress subjected to these loans made at 400% plus interest rates. You've just heard the dramatic testimony of Mary Love speak to that. As the Representative Owen said, the recent analysis of the database shows that she is not alone. Approximately 13.1% of these loans are made to senior citizens. Actually, close to 23,000 of those loans to seniors during the first 10 months during 2010. Indeed, the industry caters to senior citizens and targets them because their monthly check comes in from Social Security and that check is guaranteed. Oftentimes, they give them 30 days to repay rather than just 2 weeks, which is the typical repayment period. Nevertheless, as Mary Love has already testified, seniors get caught in the debt trap and have to continue to pay loans out and then have to pay fees which are greater than the initial loan that they made. In the attachment to my testimony, we've also itemized and set out what alternatives there might be to this current system. We keep hearing that that no one else has this service. Well, indeed, there are alternatives, including some that Mary mentioned. They include checking accounts and credit cards for which very large numbers of these folks are eligible. They include credit counseling services, and not to be overlooked are the consumer lenders, of which there are at least 300 in Kentucky, generally known as finance agencies. Their loans are capped to 24% and 36% by Kentucky statute. They did pretty well last year, over $750 million in loan receivables in 2009. None of these alternatives put borrowers in a worse place than when they started, as payday loans do. As Representative Owens told you, Congress has already decided that these loans should be capped at 36% because of the effects on military families and folks who are in the military and their morale and the threat to national security. 17 states and the District of Columbia have similar caps or less. In our neighboring state of Ohio, back in 2008, by referendum, the payday lending industry spent millions of dollars to try to repeal the 28% cap that had already been put into place. The result at the ballot was a resounding no. Consumer groups who had not nearly as much money to spend got the word out, and the people of Ohio rejected that repeal by a very large vote.